This is David Call with Ryan Everett Insurance. I'm the principal agent and owner, and I wanted to explain to you today the basics of a homeowner's declarations page. This is basically the nuts and bolts of your coverages on your homeowner's policy. And I'm going to start with my own insurance on my home with Kemper Preferred. That's who it's with right now. This is an HOB policy, you'll see right here, and it covers most issues that can potentially happen to a home. It's considered an open perils policy on the dwelling, so that's a different subject altogether. But let's look at the different coverages and kind of run through those real quick. So the address would be right here. This is kind of where your home address is. This is basically saying this is the property that's being covered. Sometimes this could be different than your home address if it's a rental property or vacation home. But for this purpose, let's look at the coverages. So coverage A is the dwelling. This is actually the house itself. So my house is covered for $210,000. That's just for the home or anything that is attached to the house. So that would be a deck, or even if a fence was physically attached to the home by a bolt or some other device, that would be considered part of the dwelling coverage. Most fences are not attached to the home. There's usually some space between the fence and the house, and that would be considered other structures. So your fence, your shed, things that are physically not attached to the home are covered under that limit of coverage. The next one is personal property. This is anything that you bring into the home, such as your dishes, your clothes, your couches, your electronics. Those are covered up to that limit. Certain personal property items have limits of coverage, such as jewelry, guns, cameras, things that are valuable and small and easily stolen. Those sometimes have separate limits of coverage, say, for example, $1,500 max. But almost everything else that's your typical furniture or personal belongings are going to be covered up to that limit, and these are all subject to your deductible. The personal property off premises, that covers things that you take elsewhere temporarily. The loss of use coverage, this is whenever you have a claim. Let's say you have a covered claim and your home is damaged because of a storm, for example, and you can't live in the house while they're doing the repairs. This loss of use coverage limit will cover you to stay at a different place, such as a hotel. It'll cover your food and other living expenses that you are incurring as a result of being displaced, but it does have to be for a covered claim. The next section is your liability coverage. I have $500,000 of liability coverage per occurrence, and that basically covers me in the event that someone is hurt on my property and they want to sue me. I'll have some legal protection and up to $500,000 under this homeowner's policy. This is really important. I think this is the cheapest portion of any homeowner's policy is the liability coverage, so I always try to go for the higher limits. We recommend at the very minimum a $300,000 limit, which isn't that much different, but that keeps you from being over or being underinsured in the event that someone was to sue you. Now, you can get sued even if there's nothing that you did wrong, as we all know, so these are things that you want to keep in mind. Medical payments to others. This coverage right here is kind of what I call a quick fix. So if someone gets hurt on your property, let's say they trip on you left some water out and they made ice on the walkway up to your door and they slipped and fell, broke their arm, this would cover the cost to their medical expenses to up to $5,000. This is an attempt to avoid any liability claims because we're able to resolve the issue quickly. The medical payments are done in a pretty timely manner. The next section is basically the deductible. I have a 1% deductible for wind and hail. That's another way of saying it. And hurricanes don't really happen in Denton, so we'll just skip that. But wind and hail deductible is 1% of the dwelling amount. This $210,000. So 1% of that is $2,100, as you can see right here. All other perils, which means anything other than wind and hail, my deductible is also 1%. Many companies will differentiate between the two because some have different limits and allow only 2% wind and hail deductible because that is one of the more common claims here in Texas. And you can see the total premium right here is $1,066 a year. We'll skip on down here real quick. On a declarations page, it's always good to have all of this information when you send it over for us to review because this might have some other information that is important and it affects the premium, such as right here I have the replacement of personal property endorsement. Basically, that means if something were to happen to I had a claim because there was a fire at my house. Well, the personal property that I have would be replaced at the full value instead of a depreciated value. So that endorsement affords that coverage. Right here, you'll see in the red, I kind of drew a line around this because this is my umbrella policy within my homeowner's policy. So I have $1 million umbrella in addition to the $500,000 limit we talked about above. This applies to my home. I have one home, two cars. So on those two vehicles and this house, I have an additional limit of $1 million of liability coverage. And you can see from here, it costs me $226 a year. So that's a pretty good amount of coverage. That's what I call freak accident insurance because that stuff doesn't happen very much. But if it did, it could really take you out financially, such as you have an accident in your car and you end up hurting the other party really bad. They could sue you and win, and you would have some protection and coverage there. So that's basically the declarations page in a nutshell. If you have any questions, give us a call and we'll explain yours to you as well. Have a great day.